Yo, what's the dealio, man? Listen, in this video, I got a straight banger for you, all right? So, on this glorious Saturday, we're going to be talking about market structure and pivot points. That's what we're going to be talking about, all right? So, before I get into this video, be sure to like this video and subscribe to the channel, all right? Every single day, I got some bangers coming for you about trading, investing, and becoming a better individual, understanding perspective and all that good stuff. All right. So over time, what we're gonna do is we're gonna make some millionaires. All right. It's gonna be people that come from this YouTube channel that's gonna make six figures in the stock market. It's gonna be people from this YouTube channel a couple years later gonna email me and say, "Hey man, I made my first million." And I started watching your videos a couple years ago. So that's what we doing this for, all right? We doing this for life-changing stuff, all right? So what we're going to talk about is market structure and pivot points. So this will help you understand when to get in calls and when to get out of calls, and also when to get out and when to get in, basically, right? If that makes sense. So here's what I mean. If you're in a trade, it could be a swing trade, a day trade, whatever. Sometimes you don't know if you should stay in or if you should get out, right? And so understanding the market structure is going to help you know when you should stay in and when you should get out, right? So what we're going to do is we're going to go to the charts and we're going to be able to break this stuff down. All right. I want you guys to understand this as well. When it comes to options, I'm self-taught, right? I didn't go to school for finance. I don't have no crazy financial background. I have no family members that taught this stuff to me when I was a kid. This is all from just studying and understanding things from a practical level, right? Losing money, figuring it out, and then making money back off of what I lost the money on. All right. So this is trial and error, and this is real life firsthand experience. Okay. I'm a practitioner. I trade every single day. All right. So we're going to go to the charts and then we're going to break this stuff down. Now, it doesn't matter what the stock market is. This is the beautiful thing about trading. It does not matter stock market, Forex, futures. Once you learn how to read the charts, you can take this into any asset class. As long as you got the charts and candlesticks, you can read this stuff. And that's the power of it. Now, each different vertical, right, Forex stocks, right, they have their different nuances. But when we're talking about learning how to read price action and looking at charts, this is all transferable. All right, this is how people are able to trade futures. And then the next morning they wake up and they trade stocks because they learn how to read the charts and understand what price action is telling them. And this is the powerful part about it all. All right. So when you're looking at when you're looking at market structure, when you understand market structure, it kind of helps you understand where the stock is going to go, where it could reject off of and stuff like that, right? So sometimes you may not even need to really be able to read the actual candlesticks, because you could just look at the market structure and you can see the direction of the stock, where it's going to go. All right, so let's go to the charts and let's break this stuff down. I'm going to break this stuff down real simple for you guys, all right? So right here we got lows, okay? We got lows. So let's look at this, all right? So right here, so let's say I'm like, all right, I want to get into a call, okay? I want to get into a call on lows. So, and let's say the stock is right here, all right? Which it is. So number one, where should you want to take this stock to if you got into a call? So here's what we're going to do. When we're looking at the market structure, I like to look at it as like an outline, right, of a range, okay? So let's look at this. So we got this to this, right? So we got this high and this high. And then we got these lows right here, okay? You see these lows right here? All right, perfect. So now you could say, okay, if I got into a call, I would be expecting lows to come and touch right here. So from 228 to 235. All right. Now, if lows got above here, right, and let's say lows started to take off, it would be breaking structure and it would be going higher, which would be good for you. Okay. And it's funny that this high would be, it would be in alignment with the 200 EMA. So Lowe's has been trading under this 200 EMA since February, right? And so it's trying to get back above there. So, so this little box that we have outlined from 209 to 236 is a structure, right? It's a structure. And so Lowe's has been trading in that structure. So you can say, now what do we have? When you understand this, you can say, okay, this is support. And this is off the daily time frame. This is support. And this is resistance. Okay? But it's an outline. So support is basically sitting at 209, and then resistance is sitting at 236. All right. Now, let's say you entered into a call right here. All right. So not here anymore. Let's say you entered into a call right here at 217. Okay. At 217. You entered into a call option at 217. All right, so let's just say that's what happened. To a call option at 217. Now, and let's say the stock came down here, right? It's at 212. And you like, should I get out? Should I get in? Should I stay in? I don't know. The stock dropped $5. So this is where people get tricked out. So Lowe's has not broken below the current market structure. Its current range is the support is 209, and it came down a little lower at 207, but it didn't close below it. It wicked off and it bounced back up, right? So you could say, okay, I'm in this swing trade. I'm still going to stay in. If it breaks below 209 and it closes below 209, that's what will make me get out, because it has not broken this market structure right here, right? And then what you may see is it may come back down, and then it'll come back up, and then it'll go back up, and it'll end up going to your target. But because it didn't break market structure, right, that's what is going to allow you to stay in. You're going to have drawdowns sometimes. Sometimes your entry is going to be flawless, and sometimes your entry may be a little bit early or maybe a little bit late. Okay? But you got to know market structure. And so when do I stay in and when do I stay out? All right? Now, let's do the flip side. Okay? Now, let's say you entered into a put, right? Let's say you entered into a put, which means that the stock is coming down. Now, let's say you entered into the put right here at 233. All right. So you entered a put option at 233. 233. Okay. Let's say you entered in a put. So now we got to ask ourselves, what is the resistance? So as we can see right here, the resistance is about 236, 237. Okay. And that coincides with that market structure right there. So you enter in right here And you expect the stock to go where? Down here, 209, right? Now it comes down here at 220. You could have took profits, or if you were expecting 209, then you staying in, right? And then look what happens. It comes back up to 229. Now you're still in profit, but you like, should I stay in this trade or should I get out? Because it did kind of retrace on me. But then look what happened. It came back down, and it came down to the price target. And so this little area right here, it is where people get tricked out of their position. But once you understand the actual market structure and you know where a stock is going to go to, that's going to help you stay in trades longer. Now, this is a daily time frame and this is a swing trade, but you do want to learn and understand how to look at this stuff and understand. Okay, so as long as this stock doesn't break above 238, it's staying inside of that structure, and you can stay in that put until it rises back down to where? Your support level, which is right here. And then it bounces off and then it goes to the upside. Okay, let's look at it on the 15-minute time frame. Okay, so let's say the past couple days. So we got a support level right here. Okay, so we got a support level right here. All right, and then we got a resistance of right here. Let's just say that we want to use this as a resistance. All right. And then we also have a resistance level right here, but we're going to use this right here. All right. So, and then we have a support level right here also. So boom. And also remember, support turns into resistance when the stock goes up, and resistance turns into support when the stock comes down. All right. So we got this level right here. All right, boom. So market structure, right? So let's say you enter into a trade, and let's say you want to enter into a day trade. And let's say you want to enter into a day trade, right? Let's say you want to enter into a day trade. I'm gonna mark this level as well, because I want to show you guys something. Okay, so this is a good example. All right, so these are your levels, support and resistance levels, right? But let's say you want to enter into a day trade, not this day, but this day. Okay, so you see how this was a resistance level and it broke this level right here. So this is a structure, right? This is a structure. So it broke this level right here and it came up. And look what it did 2 days later. It ended up coming back down here because it had to test. Okay. So let's say you see the stock go up here to 232. Okay. You see the stock go up to 232. And then you see it come down to 227. Let's just say you get into a call. Right? So let's say you like, okay, I know that this stock is going to go back up to 232. So let's just say that was your logic and you got into a call at 228. All right. So let's say you entered into a call at this level right here. Okay. At 228. So you entered in call option at 228. All right. Now you want to look at where did the stock break out from? Okay. So it broke out. It really broke out from right here. But because we're doing a day trade, you could look at it right here. So the next day it comes down. So you want to pay attention to where does it come down to. So after it broke out, it came down about halfway from its breakout, and then it established. So because it came down and then it established, it sustained right here and it came back up, you could say, okay, now this is the support level. right? So follow me. This is a support level. So because you may get scared and you could say, oh man, this stock just I thought it was going to just go right back up. Sometimes people make decisions like that. But you can say, okay, I'm going to wait it out and say, all right, where did it come down to? It came down to 225 and you got in at 228. That's about $3. Now you can say, okay, this is support. As long as it doesn't break this level right here, I'll stay in because that's going to let me know that we could be bouncing and going to the upside, right? That's how you want to do that. And then right here, you have an orb. So this is the high of the day. So if, let's say this day it broke above this high, then that's a sign that it's going to go back up here. And then, so as you can see, the next day it came down a little bit, right? It didn't break too much lower, and then it ended up coming back up. So now the stock came back up to your level of 228. So now on Monday, if lows could continue to stabilize, it could be going back up to this 232, 233 level, and you could take your profits, right? I wouldn't have recommended you enter in right here. I would have waited one more day to see if we do end up coming down lower, which it did, and then you could enter in and then go to the upside, or you could not even take that trade. This is really where you would want to have taken a trade from, obviously. But hindsight is always going to be 2020. All right. So you can look at market structure from a day trade perspective or a swing trade perspective, right? But you never want to sit here and be like, I'm gonna get in puts because the stock is super high. Don't just get into puts because the stock has been running, because I've seen stocks run for 8 weeks straight. So you may get into a put thinking that the stock is going to go down on week 4, and then they got 4 more weeks of going up, and then your puts is cooked, right? So you want to make sure that as long as the stock is staying above and honoring that structure, it's going to bounce at the low point and then keep going to the upside, or it's going to bounce at resistance and keep going down. Once it breaks the structure, that's when you could change your sentiment and get into the opposite direction of where the stock is actually going. All right. So that's market structure. Okay. That's market structure. So what I'm going to do is, the next thing is pivot points. Now, pivot points it's an indicator. But what this is basically like levels built in. So it's an indicator with levels built in, and it's going to show you where a stock is likely to bounce off of. All right. So let's go. So I'm going to turn on the indicator. Let's go to a different stock. Let's say MMM. All right. I don't have any real levels for them. So perfect. So I'm going to turn it on. Now, these are pivot points. So you can use these pivot points and it will show you where a stock is likely to bounce off of. And it is pivot point traditional. So you can say, okay, if you see a stock going up and you don't necessarily have them charted, let's say, you could turn on your pivot points and say, okay, where is this stock likely to bounce off of? And look what happens. You got this level right here, and look where it bounced off of. And then it came down here. So if the stock goes above this level, then most likely it's going to go to this level. And then we have a red candle and it broke through this level, and then it came down to this level right here. All right. So those are pivot points. You can look at it on the 15-minute, the 30-minute, the daily, and look at this. All right. So it broke above this level, and then it came up here, and then it bounced off. Now, are these pivot points 100% pinpoint accurate? No, but they can help you out in your trading. All right. So that's just something. That's just something that I wanted to share with you guys real quick. But that market structure is real important. All right. It's made me a better trader, learning how to say, okay, I'm going to stay in as long as it stays above this level, whatever that level is. Let's say I enter into a call and I'm doing a 15-minute orb strategy. And let's say it's not blasting off yet. As long as the stock stays above the top of the orb level, then I will stay in that trade. But if it closes below the orb, then I will get out, because if it closes below, then it's probably going to go back down. And later on in the day, it could come back up. But me personally, in my trading style, I don't want to stay in to figure that out, because it could just reverse. All right. So that is market structure and also pivot points. All right. But I wanted to focus on market structure because I remember I used to hear this all the time, and I'd be like, man, you know, people like to make things all complicated. But at the end of the day, it's very simple. All right. It's just the outline and the structure. And when it breaks out of that structure that's already created, that's when you can start going into the opposite direction. All right. So I hope that made sense, and I hope that helped you out. Like I always say, make sure you get up out of your head and go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on the next video. Peace.